Hi, good morning. Thanks so much for tuning in. You're watching Ask Profit on NDTV Profit, and my name is Mathew. We're going to take you through the next half an hour or so of trade, and it's an interesting day because, wow, it's been chock-a-block full of news events and sector-specific action. That's something that you should watch out for. If you've got questions related to the stocks that you own or you would like to buy, then you should send your questions to us on the WhatsApp number that is flashing on the bottom of your screen, or in fact on any one of our social media platforms. Now, let's very quickly take you through what's happening with the markets. It is a momentous day for the bond markets because today, remember, is the inclusion of the Indian bonds in the JP Morgan bond index. The yields haven't moved too much though. For the equity markets, you're seeing range-bound trade, but we are trading at all-time highs. The Nifty 50 trading very comfortably above the 24,000 mark. It is, in fact, at an all-time high even as we speak. It's come off a little bit. The banking index is down about 0.1%, but the broader markets are looking sanguine at this juncture. In fact, they're gaining more than the benchmark index right now. In fact, the mid-cap index is up about 0.5% or so, and the small-cap index is trading with gains of about 0.75%. So therefore, the breadth of the market is very firmly tilted in favor of the advances. Look at the contributors on the Nifty 50, and that will give you a sense of how things are panning out. And Reliance Industries, on the back of the announcement of tariff hikes, is right up there in terms of the gainers. In fact, it is contributing to about a half of the gains for the benchmark right now. And you have SBI as well as NTPC that are also gaining ground and contributing. Bharti Airtel is languishing just a tad bit. And in fact, we're going to talk about the implications of those tariff hikes because Bharti Airtel also incidentally announced tariff hikes earlier this morning. Smriti is with me right now, and she's been looking at this very closely. Smriti, so Reliance Jio announced it last evening. Some people are saying that it was more than expected. Bharti Airtel announced it this morning to a lesser extent. Yeah. What does it mean for the sector, though? Overall, it's positive.
Yes, definitely. It's very positive because these tariff hikes were much needed, and Bharti Airtel and Vodafone Idea have been extremely vocal about the need for these tariff hikes. The surprising factor was that Jio came in first and hiked because they haven't spoken about it as much, you know. But if you look at the hikes, well, overall hike that Bharti has taken is somewhere between 10% to 21% based on the plans, while for Jio it stands somewhere between 12.5% to 25%. So they've taken a tad bit more than what Bharti Airtel has taken. However, it's important to understand that the market share for Jio is larger than Bharti Airtel, but in terms of ARPU, which is average revenue per user, Bharti Airtel's ARPU is much higher than where Jio is currently at. So their focus still now has been on acquisition of customers. But this time they have capped a little bit on the 5G and now moving towards monetization of 5G as well. Just to give you a number, Kotak Institutional Equities in their report says that they expect inflows for the sector in terms of revenue of about 40,000 crores. So
wow.
Incremental revenue, 40,000 crore, EBITDA to increase by 30,000 crores. And mind you, this was before Bharti Airtel came out with its hike. But they did say that if they also take a similar hike than what Jio did, which stands, of course, then we're going to see such inflows.
Where was the last count on ARPU for Bharti Airtel? 200 plus, I know.
Yes, 208.
And they're saying that it needs to be upwards of 300. There's still a lot of ground to make up.
Yes. So a lot of brokerages expect that they're going to have another hike, maybe in FY27, not this year probably, considering we've already taken
FY26?
27 is when they're baking in a hike for these telcos. And yes, the target is 300, and that also they've been extremely vocal about the need, so that the return on capital needs to be much higher than where it's currently at. It's currently at somewhere around 12.5% for an infrastructure heavy sector.
Yes. Let's find out what our experts have to say. We've got Ashish Maheshwari, Director at Arihant Capital, as well as Brijesh Singh, Senior Technical Analyst at Opulent Investment Advisor, joining in. Thank you to both of you for taking the time as always. Ashish, I'll come to you first. What did you make of the increase? Was this something that you were anticipating, the quantum, I mean? And are you positive? Because I'm asking in the context of Bharti Airtel, which has come off quite substantially from the day's high, it is now trading with cuts.
Yes, I think this is just sale on news kind of profit taking which is happening in these telecom stocks, because we should not forget that for last couple of days this was the news in the market that Tariff is round the corner, and this is the reason stock went up quite swiftly, be it Idea or Reliance or even Airtel. So some amount of profit taking is happening because people are booking profit, but fundamentally we need to look at things differently, because like as your co-anchor was rightly pointed out, that the kind of free cash flows which will these companies are going to get incrementally after this hike, though it is a minuscule in terms of percentage, they are talking 70 paisa impact only per day basis. But ultimately, looking at the consumers, like Bharti is owning almost 36-37% of country's telecom density. So this is mammoth, if you ask me, in terms of numbers going forward. So in fact, there should be a good opportunity on all declines if it come further to add Bharti Airtel, Vodafone, and when Reliance, if we get below 3,100, then will be a good entry point, because these hikes are going to give a lot of free cash flows to these companies to invest in 5G and 6G.
All right, fair point. Let's start off with the queries now. The first one is from Abhishek, who's writing in from West Bengal. The question is on Suryodaya Small Finance Bank. They bought the counter at a price of 206 rupees, which is higher than where it's currently trading at. But this from a longer term perspective. Ashish, do you have coverage on this counter? And if you do, what's the target price for this from a longer term perspective?
Yeah, Suryodaya Small Finance Bank, right?
Yes.
Yes. So again, this is a stock which moves in slightly narrow range from 150 to 210. We have seen in this year the stock hovering in this particular territory only. But still, fundamentally, this is doing good. If you see in their last commentary, they are expanding their branch network quite briskly, and fundamentally nothing wrong with the company. And in my view now, as there's JP Morgan bond index and all these news flows are also there, so this particular sector will do well, because those yields have not moved up, but over a period of time there will be good demand for Indian bonds, and these banks will be able to raise more debt funds for them. So I am bullish as far as this sector is concerned. And maybe Suryodaya, my target in next 6 months is around 240 rupees.
Okay, I'm just going to take a chance. Ashish, I checked this counter, Panama Petrochem, and it's got a market capitalization of just about 2,400 crore. Do you have coverage, if at all? Because Prashant, he's bought it an average price of 350, which is lower than the current market price, but he's looking for a long-term outlook.
This is, if you ask me, in lubricant sector where they operate, they are one of the best managed company. And if you even see from December to March quarter, profit went up by 40 to, if I recollect, 60 odd crores. So doing very well. And in my view, companies like Panama, Par, Savita Oil, they will continue to do well because on account of good demand coming from end user segment. So my suggestion will be to remain invested here. The 6 month target should be 450 plus.
Right. Next counter is Tata Motors. The question is coming in from Rama. Brijesh, coming to you on this one. If you can tell us, based on the charts, should somebody who is sitting on a considerable profit there, should you book profits in something like a Tata Motors, given about 70% returns in the last 1 year? What are the charts showing?
So suppose someone has a profit, a handsome profit, definitely, it should be booked at least, partial profit should always be booked. Regarding with the stop loss has been considered as a trailing stop loss, I'll say that keep a trailing stop loss of 910 around, and if it doesn't break 910, then till that time it's been okay. Now suppose someone is looking for a fresh entry followed by for a short term gain is been considered, then the present rate can be used to go long. 990 around the stock has been trading, so one can take a long position in it with a very strict stop loss of 955 and then play for the target of 1040 followed by 1080 odd level. The time frame to hold this counter would be at least for a couple of months.
So So I'm guessing that if you bought at levels of 978, Brijesh, which is not too far away from the current market price, you should hold for the long term, right?
Yeah. So if it is 970, definitely it should hold on. Then again, I would be saying that keep a stop loss of 955, and the time frame which I have said for a couple of months, the target is 100,080. But if it's looking say beyond say 3 months to a 6 month of time frame, then I'll say then it has a target of 1200 also.
Okay, got it. Amar has got the next question. He's asking about HDFC Bank, which he's bought at levels of 1,470. Good on you. Amar, you bought when everybody was wondering whether or not to buy. And in fact, you've already been handsomely rewarded for that. He's asking what to do now. Should he book profit or should he wait? Ashish, I think a lot of people are screaming buy even right now. What do you have to say?
Yep. My view is if you are bullish on the banking sector, there's no reason why you should be bearish on HDFC Bank as such. Though this is a giant elephant, so it moves slowly, but ultimately when it moves, your price will come and it will give you slow and steady returns. So another problem earlier was that as FIs were selling and they are the major shareholder in HDFC Bank, so it came down from almost 1900 rupees to your buy levels. But in my view, that is history now, and now fundamentals will prevail, and this will be a good investment if you ask me. Even now at 1700 rupees, you can continue to hold for almost 1800 in next 6 months.
All right. Ashish, an interesting question coming in. This is from Satish. This from a longer term perspective, 3 to 5 years. There are a couple of counters that they have mentioned. You don't need to speak about all of them, but give us the pick. So KNR Constructions versus NCC and JK Cements versus Ambuja. Which one would you pick?
And there's also Kotak versus SBI, no?
Yes, Kotak Mahindra Bank and SBI as well. So across sectors here.
So Kotak versus
SBI.
Which bank?
SBI.
So my pick will be NCC, then SBI, and third will be JK Cement. In my view, these stocks will outperform compared to these other three stocks which you have highlighted. Because we have seen past track record of maybe we'll start with NCC. This is one of the most strongest infra company. The KNR is also good, but in my view, the kind of order book NCC is having and the execution visibility is there. NCC will do much better. As far as SBI is concerned, again, this is a stock which will keep on performing or outperform now, because PSU banking is the sector which has not delivered the kind of return in spite of a strong fundamental, and SBI is a front leader and going to lead from the front. And just don't sell this stock below 1,000 rupees if you are buying. And as far as JK Cement and Ambuja is concerned, though both are strong, but still, in my view, Ambuja is slightly overpriced compared to JK Cement, and JK will give you much better returns maybe next 3-4 months. At 4,400 rupees is a good buy.
Okay, all right. And what stands out for me is that you're saying you shouldn't sell SBI before it hits 1,000. And, well, that's already quite an upside. Let's talk about Omkar's question. KPIT is the counter that he's asking about. He's bought at levels of 684, and this is another counter that has defied not just gravity, but also a lot of what the street and brokerages have had to say in the past. It has gained quite considerably over the last 12 months or so. Brijesh, the question is for you. Would you hold on to this or would you book profits at this point?
So Alex, partial profit should be booked. This 1640, 1650s band has been a resistance. So I'll say that at least book partial profit in it. And regarding with the trailing stop loss has been considered, then the stock has a nice support at 1470 odd level. So one can keep that thing as a stop loss. Suppose someone wants to go for a fresh entry, excuse me. Suppose someone wants to go for the fresh entry, then I'll say don't buy at this level. Somewhere around 1575 to 1590 band, if it comes, then go for a buy. Then go for a buy side with the stop loss of 1470, and then play for the target of 1710 followed by 1820. But again, the time view for the time being, for the time to hold on would be at least for a couple of months.
All right. It's time to slip into a short break, but stay with us, Ashish and Brijesh. We'll be back and we'll take more queries on the other side. Stay tuned. Welcome back. You're tuned into Ask Profit, and we were in the midst of taking your queries. The next one is Moil. Ashish, for somebody who's bought at elevated levels of 555, the question's coming in from Mayank Shah. They say they can hold from a longer term. This has been a multi-bagger in the last 1 year and supported by, the volume growth that the company has been seeing. It's touching a new high every month. What would you suggest to somebody who's holding it at these elevated levels but can hold it for a longer term?
My session will remain invested, or in fact, if you want, you can do averaging at 500 rupees. Because if we see financially also from December to March, their profit almost went up by 90% from 50 to 90 crores. Only thing is, as slightly commodities stock are taking slight breather. That is the reason Moil and Hindustan Copper or other stock, etc., have slightly cooled down. But in my view, fundamentally very strong company. And maybe once this quarter result come, you will see those levels again. So don't miss the stock at 500 rupees.
Fair point. Ravi Shankar is tuning in from Kumbakonam, and he's asking about BPCL after the bonus. He holds 50 shares. What is the price target that you would give? I would assume that he's talking about the long-term price targets. But I will still come to you, Brijesh, on the charts. What would you say is a good level to watch out for?
So regarding with the support and resistance as a price target has been considered, I'll say the stock has a nice support at 270 odd level that should be not get broken. So one can keep that thing as a stop loss. Regarding with the resistance or target has been considered, the stock has a resistance at 335 to 340 band. So if this thing has been crossed, then the upside level would be around 380 to 390 zone. So if someone has a view of say 3 month to a 4 month time frame, then I'll say go for 340 and 390 with the stop loss of 270.
All right. The next counter is Azad Engineering. This one's from Sri Kishore Sharma, who's writing in from Bihar. The question is that they have already bought in Azad Engineering from a longer term perspective for about 3 years. Ashish, for somebody, okay, we don't know the buy price is at 2,000 rupees. It's trading below that price. Ashish, from a longer term perspective, do you have a price target on this?
Yes, I think investor can continue to hold this because the kind of space this company operates into aerospace domain. And we have seen phenomenal growth. If we seen 1 year time from 8 crore, then net profit went up by almost 58 crore in Azad Engineering last year. And I'm expecting this year they will do almost 80 crore plus profit because the kind of order book company is having. So the stock is slightly expensive because it's 11,000 crore plus market cap now. But as this company is working in a quite niche area, so they'll continue to get valuation. So my session will be at 1,900 rupees. Even you can contemplate to add more shares of Azad Engineering.
All right. The next question is on Ratan India, and Apurv wants to know whether he should buy this or not. And I will come to you, Brijesh, on the price trends. What do you say? Would you buy something like this?
So it is Ratan India Power?
That's right, Ratan India Power.
Okay, see, we have seen stock all the way from 8 odd level to jumping towards the 20, and now it is trading at 17 or 17 and a half around. Still, the shorter term moving average suggests that it has a resistance 18 and a half to 19 rupees. So I'll say if 18 and a half crossed, then the trend again would be coming on the buy side. Otherwise, it has a chances of touching at 16 and a half around. So for a very short term bet has been considered, 16 should be the ideal level. 16 or 16 and a half is the ideal level where one can go for a buy side with a stop loss of 14 and then play for a resistance of 19 and a half followed by 22 rupees.
All right. Brijesh, the next counter is Ireda. Now, this is a popular counter among our viewers. The question is coming in from Shreyas. Should you buy for the short term is the question. We're seeing a little bit of correction in the counter in the last couple of sessions. Is this a buying opportunity from a shorter term perspective?
So the trend is still positive. The shorter term time frame of the chart suggests higher tops and higher bottom formation. Nothing wrong in it. Volume is been high, supported by that. Even the moving average, the stock has been trading above that shorter term moving average, medium term moving average. So nothing wrong in it. Regarding with the risk reward ratio has been considered, not at this level. 191 the stock has been it's been trading. I'll say that somewhere around 185 around, if it trades, then one can take a buy call. Excuse me. Then one can take a buy call in it with a stop loss of 175. Play for the target of 205 to 210, and the target can be further extended to 225 if someone has a view of 1.5 month or 2 month around. So for a very short term, it's been considered 185 would be the ideal level with the 175 as a stop loss.
All right, that's a view on IRIDA. We've got Supriya from New Delhi asking a question. She points out that she's new to buying stocks and she's looking for short-term gains. I have just asked her how long she can hold and I'm waiting for a response. In the meanwhile, I'll come to you, Brijesh. She's bought stocks like IOB, PNB, Suzlon as well as Yes Bank, and she's looking to add some more stocks. What would you suggest that she can buy from a shorter-term time frame?
So for a shorter term time frame has been considered, then I'll say that right now IndusInd Tower has moved up significantly, since all the stocks regarding with the telecom sector, and even the news has been broke out in this IndusInd Tower. 374 around the stock has been trading. So if it trades somewhere around 365 around, one can take a buy call in it with a stop loss of 352. Play for the target of 410 around. Another call would be Ratan Enterprises, not Ratan India, Ratan Enterprises, somewhere around 83 around the stock has been trading. So current rate can be used to go long with a stop loss of 78 rupees. Play for the target of 95 to 98, and both the counter holding time frame would be at least for a month.
All right. The next counter is EPAC Durables. Now, this is a recent listing, listed only a couple of months ago. Ashish, would you have looked at this counter? This question is coming in from Mukund, who bought it at a price of 230 rupees. Now, if you can pull up the chart and see where it's currently trading at. Okay, it's slightly above that at about 245 rupees. Would you suggest booking profits, or would you continue holding on to it?
No, I'll like to continue hold on this stock. The stock has moved up from 150 rupees price to almost 255 and is still going strong. Again, the reason is they are third-party manufacturer of air conditioners, and the way this time air conditioners requirement and demand was there, I'm expecting even this quarter they are going to do bumper profit. If you see even the December to March profit went up from 4 to 28. This quarter at least 40 crore PAT company will do. And mind it, the way PG Electroplast, another competitor of theirs, is moving, EPAC is still quite undervalued and should be hold for the long run.
Okay. The next question I'm taking is from Himanshu, and he's asking about IndusInd Bank. He's bought at levels of 1,115. If we can pull up the chart very quickly. All right, it's trading above his buy price. He's got 40 shares. He's looking whether to hold or sell. Ashish, you've already indicated what your preference is, I think, in the banking pack, but would you hold on to IndusInd Bank?
Yeah, I like to hold IndusInd Bank with maybe with a stop loss of 1450. Though stock is consolidating in this 50 rupees band for quite some time, but still, in my view, compared to Kotak Bank, this is much better bet in private sector bank. So just keep a stop loss and hold, and try to exit between 1550 to 1600 in this bank.
All right, that was the last question on this edition of Ask Profit. Thank you so much, Ashish and Brijesh, for joining in and for answering those questions for us. And viewers, thanks for tuning in. I hope the questions that were answered today are helpful to you. But if not, if we were not able to take your questions, we'll definitely try and take them on Monday. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
and welcome. This is Hot Money. I'm Agam Vakil, and in this show, we take you through all the stocks and themes which are buzzing in trade. A quick look at how markets are faring. They're faring well. It's turning out to be a Friday, well, which is in fact advancing it. So far, there are no signs of any profit taking. We continue to move from strength to strength, with the Nifty 50 advancing by about 0.25%. The Bank Nifty also up and about, and that, of course, bodes well for sentiment in general. See, the Bank Nifty is given a little bit of the gains coming through right now with a sharp dip off late. But, overall, the markets are fairly steady. And even though you may most likely see a little bit of profit taking towards the end of the session, well, we're in the green and we're above the mark of 24,100 at the moment. And that's what counts. Let's take a look at how and what stocks are the ones which are actually leading to the advances for the Nifty 50 specifically. And we do have Reliance advancing today. Remember that Reliance Jio has taken a hike. We have gains in SBI and HDFC Bank along with Tata Motors. Of course, HDFC Bank and Reliance are the relatively heavier weighted companies out there. And what's weighing on the indices is ICICI Bank and Axis Bank. It's a little bit of a surprise that perhaps Bharti Airtel is also under pressure. This is after the company has also announced hikes coming through when it comes to their respective tariffs. The telecom sector will, of course, be in focus. It's also something that we will be talking about in the show today. But moving on in terms of the broader markets, off late and over the past few days, what we've seen in the broader market specifically is not always, that outperformance that we have been used to. Though today, of course, is once again, a lot of these indices have reverted to the trends that we've seen. Today, there is a significant outperformance, both from the mid-cap index and the small-cap index. The small-cap index is up 0.8%. And to very quickly take a look at the market breadth as well, that's currently positive too. So we have about 2 gainers for 1 loser. And remember that yesterday, this was not a very encouraging picture, but it does seem like we have seen a little bit of turnaround come through there as well. That said, let's now take a look at all the stocks that we're going to address in the show today. So naturally, we will talk about telecom stocks in general. But even if you keep aside the telecom stocks, we want to talk about Reliance Industries specifically, notwithstanding Jio, of course, which has also taken up price hikes. We're also going to take up Polycab, where we do have a large bulk deal. JK Tyre on account of a broking note, and the cement sector. Of course, consolidation continues. We want a little bit more outlook there. And BSE will be in focus. This is the only listed company which actually deals with Indian equities and the risk and related derivatives. And to take us through the views here, we are in conversation with Sameer Dalal. He of Natvarlal and Sons stockbrokers. Sameer, good afternoon. Thanks so much for joining in. Before I come to you, let me first bring in the conversation here. We have Rucha, who's joining us to give us the latest update on the tariff hikes taken up by telecom companies. Rucha, over to you.
Thanks, Agam, and good afternoon. So as you rightly mentioned, both of the telecom operators, Jio and Airtel, have announced price hikes. While Jio had announced price hikes yesterday in the range of around 12% to 25%, Airtel today has followed Jio and hiked the tariffs by around 10% to 21%. Now, both of these tariff hikes would be effective 3rd of July, and both of these telecom companies have hiked prices for prepaid as well as the postpaid plans, which was likely not the case with Jio last time, wherein it had skipped postpaid plans for the tariff hike revision. Now, if we compare the tariff plans for both of these companies, for a 28-day plan which offers 1.5 GB data per day and unlimited calling and unlimited SMS, Jio is pricing this plan for say 299 rupees, while Airtel is pricing this plan at a slight premium range of 349 rupees, but also it is offering a maximum of 100 SMS per day. So essentially, Airtel is offering a plan at higher price but with limited SMS as compared with Jio. Now, Airtel attributes this price hike to their target of keeping the average revenue per user of at least 300 rupees. So this is what we have for Airtel and Jio, and soon brokerages also expect Vodafone Idea to hike their prices sooner or later.
Okay, Rucha, thank you so much for joining us and taking us through the latest hikes in tariffs, which have come after a really, really long time, something that a lot of industry experts have been talking about, anticipating, and finally, that time is here. Well, on that note, let's get in Samir into the conversation. Samir, welcome to the show. Your view on the telecom companies, what's the way forward here?
So, I think rightfully said, the telecom sector wanted to increase the prices because the return on equity and return on capitals for the businesses currently were quite low. No doubt the business is still growing. They're getting new subscribers, which is automatically allowing the operating leverage to play through. But at the end of the day, you had to increase some amount of prices. India is the cheapest cost of telecom in the world, right? So we knew price hikes were coming. In fact, if you remember, if you go back 2 years when prices were around 150, 160 ARPUs, average revenue per user, that time people were talking of how we can scale that up to 300. So we are in the right direction for that. But the problem is all of that is already in a lot of the prices of the stocks. So Bharti Airtel has run up from about 4,500 from 2 years ago to about 1,400 odd levels on the back of the fact that you will have earnings growth, profitability growth as they increase their prices. And so that is only playing catch up to, I think, what the stock price has already done. So to a large extent, this is in line with expectation. What you all also said, Vodafone will probably also increase given the fact that Vodafone has been reporting losses. So there's a very strong possibility that we could see them increasing prices. And the status quo then given it's a three-player market, if all three have, people don't have many more choices, so they will have to go with this. And what you will see is the ARPUs going up, so it's a positive.
All right, fair enough. So that's the word coming in on the telecommunications sector, as well as the expectations on your average revenue per user. Let's move on and talk about Reliance Industries as a whole. Now, of course, Jio is one very big and important part of Reliance Industries, but there are several other companies which are also associated with that. The question really is that where do you go and what do you do with Reliance Industries going forward? Of course, given the fact that it is now expanding substantially into energy, it also has plans to list its retail business, and of course it's also spoken about the potential listing of its telecom business. Going in, it has laid out and so significant investments towards green energy as well as solutions with respect to energy storage going in. The question really is that at this point in time, how does Reliance Industries look? Samir, this question is for you. What is your assessment on Reliance Industries going forward?
So, the Jio, like we already spoken about, the profitability is bound to increase over time given the fact that the price ARPUs have increased. So Reliance is one of the companies that has been the most profitable when it comes to telecom because they didn't have all the legacy issues that some of Vodafone and Airtel had. So from that perspective, that business is doing well. But what you also said is that is only one part. There are multiple parts, and the biggest part and the biggest profitability for Reliance Industries still comes from the oil and the petchem business, right? Now, as long as the refining margins remain healthy, I think Reliance will do well. There might be a slight contraction maybe in refining margins going forward. From what was there historically, for the simple reason that the Russian crude that was coming at the cheaper levels is not coming at the same cost anymore. There has been a hike in that, and because of that, what you will see is some amount of margin pressure there. Although I'm saying profitability is still going to be extremely healthy, it will not be as probably healthy what it was maybe 2 quarters back. So from that perspective, I think that part of the business is at the moment fully valued. Then we come to the retail piece. The retail piece is something that is growing, but you see the competition in that space is quite significant, and Reliance, as much as we want to say, has not been able to deliver on the profitability side as we thought they would be able to once the operating leverage played out, because they're constantly in the expansion mode. And as long as they remain in the expansion mode and capital investment, I think that's going to ensure that the ROEs and ROCEs remain low, which is not a very good sign for the retail business in the near future. Probably will do well over the next 2 or 3 years, but in the near term might still be under some pressure. And lastly, you talked about the fact that they're getting into this new energy business. They're still in the investment capex phase. returns will take about 2 years to come through. So I'll not be overly gung-ho. So I think again the price is trading at the stock is trading at a fair price. Corrections towards 2,700 become a buy. If it goes towards 3,300 odd levels, I would like to say that one can take a little money off the table and then buy it back 10% low.
All right. All right, fair enough. So Reliance Industries, of course, along with various businesses and various large businesses which are a part of it, at the moment, of course, looking up around as much as 1.8%. And I'm guessing that the gains today are not necessarily just attributed to the price hikes carried out by pardon me, Jio going in. But the next stock which is on our radar is Polycab. The reason why I wanted to address Polycab today was that, well, because we have actually a block deal where we understand about 3.38 million shares have exchanged hands. At the moment, of course, the stake sale comes up to roughly around 2,300 crores. If you consider Polycab as a whole, the stake exchange is not substantially high. But we are yet to ascertain who, in fact, is the buyer and seller in this case. The reason why I want to take up Polycab is that it's taken a slight knock in today's day of trade. It's down as much as 3%. This has been one of those quiet movers, right? Because over the last 3-4 months, what's really happened is that while a lot of stocks in the broader markets have continued to gain, Polycab has also, of course, gained in tandem. But but its movement has been slightly more quietly. Remember that a few months ago, when we had those issues with respect to the income tax, Polycab had seen a sharp knockoff. And at that point in time, of course, this was, of course, back in January, it was trading at levels of well below the mark of 4,000 rupees per share. Since then, it has seen a gradual recovery, and that recovery has been, not just gradual, but also steady. And based on that, the last 6 months are now looking at a return of as much as 23%. Of course, the last 6 months also includes that sharp dip on account of its various challenges with respect to, the authorities. That's your gain on the last 12-month basis. It's up around 87%. Today, Polycab is down about 3 odd percent. I'm looking at some reports which attribute a trailing price to earnings of around about 50 to 60 times for Polycab, which is not the cheapest of them all as far as this company is concerned. Samir, if you can come in on Polycab, your way forward, whether or not it would still be a compelling buy, considering its growth prospects going in.
Compelling buy, probably not. And just to, what you talked about, it's been a steady mover. I mean, 86% in 1 year is a phenomenal move. If anyone gives me 86% in a year on it, even 50% on a move in a company in a year, I take it with both hands, right? So the company's done extremely well. You're right, they had a bit of a niggle in the middle where they had a news where they were an income tax rate, and that gave an opportunity for some people to get in. Anyways, now let's talk about the fact going forward. So like you rightfully said, the stock is trading at 60 times, and that means valuations, I think, are fully priced. Now, why is the stock trading at 60 times trailing earnings? Is the fact that expectation is that the company's growth prospects are going to be very good, given the fact that the real estate industry has been growing at a very healthy pace. So some of the biggest demand for the products of the company come from the real estate, when buildings get done, when new houses get put in place, the interiors, the wiring, and all of that. Apart from that, of course, the B2B business is also there, but the B2C business is something that is the most profitable for them. And given the fact that inventory has been selling off aggressively in the real estate segment, which means there will be construction activity, new as well as interiors work, that assumption is that given that the growth will happen, there will be more operating leverage, there will be better utilization of their plants, and from that perspective. But given the fact that it's already trading at 60 times, even if they grow at about 25 to 30% of the top line and bottom line around that, because